Yeah, so I guess the battle against inflation continues at this time. See, central bankers still looking to hike rates in the global markets. We're seeing the U.S. Fed indications that they might actually slow with the rate hikes. Since they see inflation is actually, coming down a little, but right here we're still seeing inflation rise on the African continent, and the central bankers are still quite hawkish at this time. And we definitely know that the markets do not like a hawkish Fed and raising rates. So at this time now, we move on to another conversation that's quite heavy on the African continent, and that's talking about debt. And this period is certainly a sensitive one for most countries as debt levels are rising rapidly. Government revenue squeezed in most parts of Africa. And just yesterday, we got that publication about some media houses claiming that Nigeria defaulted in debt repayment to China, and that has been cleared by the Debt Management Office. But joining me now is Mrs. Patience Niha, Director General of Debt Management Office, joining me via Zoom. Great to have you on the show.
Thank you very much. Good morning.
Good morning. So that publication yesterday definitely did cause a stir, and your office did put out a statement debunking it. But what's the state of Nigeria's debt to China at this moment?
Okay. Thank you very much for the opportunity to clarify the issue. If you don't mind, I would speak to your question directly, but also try to address several issues. So, but your introduction is quite right about rising debt levels across the world, not just Africa. And it was a major focus during the World Bank IMF annual spring meeting. So it is something that is global and not peculiar to Nigeria. Having said that, certainly we are monitoring debt levels, monitoring debt service numbers, and actively focused on revenues because, like we always say, that is the missing link, and the data does show that. So speaking about specifically about the China loans are actually a very small component of the total debt stock. Okay, so as of December, we had about 4.26 billion US dollars as loans from China out of a total external debt stock of 41%. So that's just 10%. The second important point to make, that's out of external, just 10%. And when you look at the total, it is much smaller than that at the total debt. Secondly, the China loans are concessional debt, like we say. So interest rates are below 3%. They are for length tenors of about 15 years. Okay, so these are the least cost financing or more borrower-friendly loans that we can get. I also like to add that it's unfortunate that we seem to focus a lot on China. But with the China loans, we can actually see a lot of the infrastructure that has been done with the loans. You look at the rail lines, you look at the airports. So we actually can see those borrowings tied to infrastructure. Okay, so the second or third thing I'd like to speak to is the issue around debt service. Just to sort of create a bit more awareness about the debt service process. So debt service doesn't just happen, okay? So they're projected for, because the debt data are kept electronically in the software, so they're projected and included in the annual budgets of the federal government, as well as the medium-term expenditure framework. So we don't, debt service figures don't just appear and then we are planning, how do we fund it? So they're projected, they are approved in the medium-term external borrowing program as well as the annual budgets. And internally, not just internally, involving other stakeholders, their documented process for settling debt, whether it is external or domestic, there's a documented process. So one has been approved in the budget. Those debts are serviced as we don't, and there's no selective servicing of debt to say, okay, this one is to China, so we won't pay it. So that doesn't arise. Whether it's domestic or external debt, once they are due, the process is triggered and they are serviced. Okay, so debt service is not an ad hoc process. It is provided for and it is serviced. So I think we need to take away this notion of Nigeria has defaulted in debt service or it has defaulted to China. It doesn't happen, whether local, whether external. All debts are debts, and we process payments when they're due. So that statement is not correct. And I think just to sensitize those viewers who look at the budget and other statements, whether it is budget or budget performance. If you look at the annual budget, you will see previously you will see 3 lines: total debt service, external debt service, and domestic debt service. Now, for improved transparency, 2 additional lines have been added. This sinking fund, which we use to redeem promissory notes that have been issued by government. Then there's another line that is for the ways and means advances. So we have been extremely transparent with this and recognizing, not just anticipating, but planning for the redemption of or for the honoring of our debt service obligations, which includes interest and principal. So Nigerians should please be aware that this is how it happens. So there's no default arising from that. Okay. And finally, if I may say, the missing link is revenue. So while debt service to revenue ratio is high, we do need to increase revenue so that that ratio would be much lower than where it is now. Thank you.
All right, thank you for clarifying that. But before I let you go quickly, you did mention the revenue issue, but is there any risk of default looking at our revenue at this time?
Well, I think I've clarified. Oh, no.
Hello, can you hear me?
Okay, yes. Okay, I just lost
yes.
picture.
So I was asking if there's any risk at all.
When you talk about debt default, I think we're not just watching and thinking this would happen. We're actively seeking to increase revenues, and those have been, I believe, shared with the public several times. So I think we should not just say, oh, okay, we're going to default. No, we're actively increasing revenues. But like I said in my earlier statements, this is an issue that the international financial community is looking at as a global phenomenon, and Nigeria is not isolated in this regard.
All right, thank you so much for clarifying things here. Ms. Patience Oniha, Director General, Debt Management Office. Thank you so much for clarifying the show today. Thank you.
Thank you for having me.